Okay, welcome everyone. Welcome. I want to get rid of this gum, and I have nothing to put it in. Here's a piece of paper. I'll put it in there. Sorry about that. Welcome everyone. My name is Mark Fuller. If you're new to my content, this video is going to be educational for the purpose of helping just to give you more awareness if trading the markets is something that you're interested in or looking to do, or if you're currently doing it and you want to be consistent as far as being profitable. Whatever your issue may be, or your concern, or your interest might be, my hope and my prayer is that the information in this video and in all of my educational content is valuable for you and will help you to become a profitable trader, period. Let me get into my content. What are the advantages of trading binaries versus traditional Forex? What are the advantages of trading binaries versus traditional Forex? Really, I want to do a compare and a contrast for these two different types of instruments. Binaries are a very specific instrument that the underlying Forex markets are what the binaries are based on. Unlike traditional Forex, where you can trade contracts of the actual market and utilize and take advantage of margin and leverage. So I know some of you are like, well, what the hell is he talking about? I don't know what he's talking about. If you Google Forex, you'll understand and get a basic understanding of how Forex works. Forex utilizes leverage, where you can go to a broker, where you can trade available Forex markets, and by buying or selling the contracts of the underlying market that you're investing in, you can be trading, for example, the euro dollar. For currency pairs, it's two actual individual currencies that are what make up the underlying market that you're trading. So, for example, you can trade the euro against the dollar, the pound against the dollar against the yen. And when I say the dollar, I'm talking about the USD, the United States dollar. Two currencies make up one Forex pair. It's called a pair. And these pairs represent one instrument that you're trading. Okay? And I'm not trying to go through the whole, give you a tutorial about what Forex is and all of that. That's not what I'm doing in this video. I want to give my honest opinion about the advantages of trading binaries instead of trading Forex contracts. Now, Forex, you can trade standard size contracts, mini contracts, and you can trade micro contracts. And all they are doing is referring to the amount of leverage that you're using on your contracts in your account size. So, for example, if you open your account with $500, you can leverage your account depending on the size lots that you're trading and only trade $1 for every pip movement. And if you don't know what a pip is, look it up online. I'm not here to give you a tutorial again on Forex. But anyway, just follow along with me. Every dollar of movement represents a pip. You can also leverage it up where every $10 or every pip represents $10. So let me start over. Every pip can represent $1. It can represent a dime. It can represent 10 cents. It can represent $10. It can represent $100. It depends on the amount of leverage that you're using in your account as far as determining how much you're going to spend to buy or sell the contract and how much you're earning or losing for every movement of pip, or every pip movement. In other words, the last digit of the actual price, when you look at it, is either going to represent the micro pip, is going to represent the pip. It depends on the way that you're looking at the price. Sometimes the price is broken down into 4 digits, and sometimes it's broken down into 5. It depends on the broker, and it depends on the amount of leverage that you're taking on that trade or in your account. Usually they have it designated and they separate them. So you got to decide what amount of leverage you want for that account. So you can use standard size lots, or you can use micro lots, or you can use mini lots. And that would determine how much leverage you're using on every trade. So in other words, that's going to determine if every pip is worth a dime, or is worth $1, or is worth $10. Okay. So anyway, the underlying Forex market also is what the binaries are based on. But the binaries are only using the price of the market to reference as the instrument that you can trade. So binaries are broken down differently. Binaries are utilizing the price of the market that is underlying, or the Forex market that you're trading under the binary. For example, I trade the pound, the GBP USD. The strike prices of the options are based upon the price of the market itself. When I'm trading a strike price, I'm only trading that strike price as a result of where the pricing is in the market itself. That's what determines the price levels. That's what determines the strike prices of the options that I can trade. Okay? Now that we got past that, I spent 6 minutes explaining that. Didn't mean to spend that much time. But listen, the advantages to me of trading binaries over Forex is that specifically on the NADEX platform, when you trade on this platform, you can limit the amount of risk that you take on your trade, and you can determine how much time you want to be in the trade for. So I trade 5-minute binaries, just to put this in perspective for you. Every 5 minutes, there's an opportunity to take a trade. It doesn't mean that I'm going to take a trade every 5 minutes, but the opportunity to take a trade exists every 5 minutes because it's a 5-minute binary. So they roll over every 5 minutes. Okay. I hope you guys are following me. And y'all excuse me, I'm watching the market as I'm talking. All right. Not too much going on. I'll continue to observe. So the underlying market and the way that that market moves ultimately determines whether you're going to win or lose the binary. Now, the advantages of trading binaries over Forex, when you get into trades on Forex, you can be in trades for days. You can be in trades for weeks. Ultimately, depending on the volatility of the market and the ranges of the market, like how far up and down the market is moving, to determine whether or not your profit targets are going to be hit, or if you lose or the trade goes against you, where your stop, or if your stop will be hit. And the stop loss is a way in Forex for you to predetermine how much you're going to lose if you were to lose. So if the price of the market goes against your position, the stop loss determines how much you're going to lose on the trade. Wherever you place your stop loss is a point in the market where if the price goes to that point, you'll be automatically taken out of that trade at a loss, but it's going to limit your loss. And if the market goes beyond that, it won't matter because you're already out of the trade. So it's a way for you to protect yourself on that trade. If the trade goes against you, the stop loss is there to prevent you from losing any more than the limit of the price that you have set for your stop loss. Okay? So understand, that's one way to limit your risk in Forex. But with binaries, you don't even have to do that. You literally, if you're trading 5-minute binaries, when you get into a trade, you'll be in a trade for, anywhere from a minute to 30 seconds to maybe even less time. Sometimes, you know, depending on when you enter the trade, you can enter the trade, you know, 3 minutes left, 2 minutes left, a minute left. It depends on what you're doing and what your approach is. There's opportunity way more in trading binaries, in my opinion, versus NADEX, because you can create a trade plan for yourself. And if you're good at recognizing behavior in the market and the way that price moves, this will position you to make a lot of money with binaries, because you can just get your trade and you're done. Like, you don't have to wait days. You don't have to wait for the market to change direction or go back in the direction of your trade. You know, sometimes I remember in the past when I used to take trades on Forex, there were times when, excuse me, sorry about that. There were times when I was in a trade and my stop, not even my stop, my profit target was almost hit. But because it was not hit, the price went against the trade and either came back to where it started, meaning that I would have broken even on the trade, or there have been times when the trade came all the way back and hit my stop loss after being within 5-10 pips of hitting my target, because of how I was trading at that time. My way of trading at that time was it has to hit one or the other. I wasn't adjusting the stop. I wasn't using a trailing stop or anything like that. So the price either was going to hit my target or it wasn't. It was going to hit the stop. So if you let the trade run, sometimes it'll come close to your profit target, won't hit, go back the other way, and you could either just spend more time and more days in the same trade waiting for it to go back to your profit target, or in some instances, the price will go completely against your trade completely and go all the way and take your stop loss out. So there's so many different variables that go on with Forex. It becomes more difficult for you to trade in Forex because you have to wait so much time, many times, for your trades to close out, because you're waiting for something to trigger either your profit target or your stop loss. And if you have predetermined profit targets, many times you'll set your trade ups to be like 2 to 1, meaning that if you win that trade, you'll earn twice as much as if you were to lose the trade, because your profit is twice as much as what you're risking if you were to lose. But again, when you trade that way, you're dependent on the market moving in the direction of your trade and with enough volatility or momentum to take it to your profit target in the first place. So this requires a lot by the market, and it requires a lot of patience on your part, because you're going to have to wait sometimes for days, sometimes for weeks for your trades to close out. So, then you got people that like to scalp, where they're taking shorter term trades. They might be on a lower time frame, and they're only taking 2, 3, 4, 5 pips at a time. Every time that they jump in, they jump out with 3 or 4 or 5 pip profit, sometimes more. It could be 20 pips, 30 pips, whatever it is. Again, it depends on what you're doing, what your strategy is, what your approach is, what your methodology is. And there's just so many different variables. Like, it's not as simple and cut and dry. You have to simplify. And only someone with a high level of skill that has the patience and the wherewithal to deal with the way that Forex is can, go through Forex and create a strategy that works for them consistently. And with Forex, it's more so strategy, because you got to create something that you can repeat, a method. With binaries, we don't have to use none of that. All we got to know is how the market is behaving. And once we are able to determine what the behavior is in the market, we can then position ourselves to just use the binary to capitalize at the time. That's a big difference. That's a huge difference. So that's what my preference is. My preference is to trade the binaries over NADEX. But that's just me. But, this video was well overdue, like long overdue. People have been asking me about this for a long time, as far as, well, what are the advantages of trading binaries instead of trading Forex? Everything I'm telling you now. That, you know, to me, there's way more advantages of trading binaries, especially on the NADEX platform, because for one, your trade is done. Like, it's in and out. You get in the market when the time comes, take the trade. You're either going to win or you're going to lose. Your risk is predetermined. You know how much you can lose. Then you know how much you are going to win if you're right. Learn the market and understand how the market moves and how its behavior is and the environment that you should be in. It becomes a whole hell of a lot easier to do things and to be profitable. And this is why we're, you know, consistently profitable on TeamAlliance. It's because that's what we apply every day, all the time in the market. So in any case, I hope this video was valuable for you. I hope that this content, you know, is helpful and helps to give you some understanding and a foundation from which to start if you're looking to get into NADEX or binaries. You know, even if you're looking to get into Forex, you know, there's things that you need to consider getting into Forex. For one, you really need a high level of skill in the market to trade Forex, because you need to know, you know, how are you going to go about taking trades? What type of risk reward are you going to be using on your trades? You know, what type of environment in the market are you going to be trading during? All of these things are relevant. You cannot disregard anything. So it makes it a lot more complicated, you know, in my opinion, to attempt to trade in the Forex market. And I can say that with full confidence because I've came from trading Forex. I traded Forex before I traded binaries. So I know all about Forex, all about it. Very familiar with it. That's why now with NADEX, with the binaries, you know, we're in such a better position now more than ever because we have this exchange at our disposal and we can capitalize off of our market knowledge. And that's what makes this powerful for us on TeamAlliance. So in any case, if you are interested in training with me is only $35 a month. You know, you learn how to not only trade the binaries on NADEX, but you're going to learn how to interpret the market itself so that you know when to trade, so that you'll know when to put your money in the market and, you know, earn a profit, and just rinse and repeat the process over and over again. And next thing you know, you're consistently profitable, and that's it. Nobody can take that skill away from you. You got it. Rinse and repeat, more of the same. All right. So anyway, this is Mark Fuller. The educational series playlist should be underneath this video if you're watching this on YouTube. Also check out the 1-a-day challenge content. You know, I'm documenting trades that I'm taking every day. In an account, I started with $100. You know, I've slowed it down tremendously because I want to put out more educational videos and more content just so that I can provide more value. You know, by now, everyone already knows I know how to trade. You all know that. It's not about me knowing how to trade. It's about you learning how to trade and to be consistent the way that you see me. So, you know, my purpose for doing the 1-a-day challenge is just to continuously have an ongoing documentation of what it looks like when you slow this process down and you just remain consistently profitable over time. You know, you're able to see what that looks like through that series. All right. So you'll see the playlist for that also underneath this video. And aside from that, you know, those of you who are going to train, I'll see you in training soon. Everyone else, continue to enjoy the educational content. And, you know, reach out to me when you're ready. 914-979-2317. Fastest way to contact me is on Facebook. Send me a friend request. Let me know that you want to get into training, and I'll get you set up ASAP. All right, Mark Fuller, TeamAlliance. New York City. I'll holler at y'all. Deuces.